Howdy there, folks. Welcome into today's video. It's a fun one here today, folks. We're going to go through my top 5 worst stocks and top 5 best stocks in the public count. I'm going to speak about these stocks. A few of these stocks I talk about a lot on the channel. A few of them we don't talk about very often. So I thought today I'd go ahead and share my perspective and opinion on all these stocks, the ones that are doing absolutely horrible and the ones that are doing absolutely phenomenal. So hope you guys get a lot of value out of today's video. I appreciate y'all being subscribed. It should be a fun one here today. Thanks so much. If you want to apply to join my private group, check out the pinned comment down there. Alrighty, guys. First one up here, the number 5 best will go, best, worst, and throughout the whole list. Number 5 best stock I own is Skyworks Solutions in the public count. SWKS, good dividend paying stock. Skyworks Solutions, very good company. Great company, actually, but they're in a bit of a pickle right now. And this is one of the reasons the stock's been actually damaged quite a bit, is they get a significant portion of their revenues from, guess who? Apple. And the issue right now is Apple's revenues, especially as far as iPhone are going down right now. Volumes are going down for Apple right now, right? So when you're a semiconductor company that you make a ton of chips that go into iPhones, well, if iPhone volumes are going down, it's not a good thing for you, right? And so Skyworks is in a bit of a pickle here, right? We're doing well in the stock and it's held together decent. We're up about $20,000 on it, but it could be going a lot better if iPhone volumes were better. So, right here, they make the front end module for this iPhone 14 breakdown here. They have several other components in relation to iPhone. It's very common for them to have anywhere between 5 and 8 chips in an iPhone, just Skyworks Solutions. So they make a significant amount of money every time a new iPhone is sold, essentially, right? Now, the other issue is we have a bit of a problem coming with the next iPhone, okay? So iPhone 15, they're gonna price it really high for folks like myself that always buy the highest end model pretty much year in, year out. It's gonna start at $1,300. Start for the iPhone 15 Pro Max. I have the iPhone 14 Pro Max, right? And so this is one of those situations, and then now you're going to be looking at $1,400, $1,500 after tax for base level Pro Max. I mean, some of those versions could go 2,000 plus, right? So I think there's going to be quite a few people that usually get the highest end model, like even maybe myself, that are just going to say, no, I'm okay. I don't need the Pro Max this year. We'll go ahead and pass this one by. The other big issue we have here is, look at this. This is like the big shift for Apple this year. It's going to have a USB-C port. Okay, so of course they're going to make the camera a little better and the phone's going to work a little faster as every single iPhone new generation, but this is like the big technological jump is USB-C port this year. So folks, nonetheless, it's not a pretty situation for iPhone volumes in the short term here. No. iPhone revenue might be somewhat okay because Apple's just going to make a ton more from the folks that buy the highest end model every single year, right? But as far as volumes, remember, Skyworks is a volume player. It's about how many iPhones you're selling, not just the iPhone revenue, right? Now, the good thing for Skyworks, right, is one, they have way more customers outside of just Apple. It's just Apple's a significant customer for them because iPhone volumes are so big. But in terms of this one, it trades cheap. Forward P, or at least as far as this year's numbers, about 12. As far as next year's numbers, about 11.6, we could say, or so. So, Skyworks doesn't trade rich. That's the one good thing we got going for ourselves in regards to Skyworks. And it's a great company. They execute well, always at the forefront of technology. And they have many other customers outside of Apple. So it's okay stock. It's not as grand as it once was when iPhone revenue or iPhone volumes were just going up and up and up, huge every year. Now we're in a bit of a tougher spot. Hopefully, Apple can do something for iPhone 16, which will be next year. Hopefully, they'll get people excited. We'll see. My number 5 worst stock in the public count is PayPal, down about $10,000 in regards to PayPal so far, right? I talk a lot about PayPal, so I don't want to spend too much time on it. Bottom line is with PayPal, stock trades extremely cheap. I mean, we're talking about 12 times this year's numbers, 10 times next year's numbers. It's incredibly cheap, especially when you're a company, right, that's expected to grow 7 to 10% a year, pretty much year in and year out for several years to go in the future, which is exactly what I see going on between PayPal, Venmo, Braintree. No question in my mind at all. Plus, they actually have some other services that don't get talked about that much, but those are the 3 main ones. Like, PayPal's got growth for days and days and days. Now, in terms of my base case around PayPal, okay, it's pretty dang bullish, okay? And remember, my base case is always kind of like very realistic scenario I see. Because I always create an ultra bearish case, a bearish case, a base case, a bullish case, and an ultra bullish case. So, a stock like PayPal, in my opinion, will be able to command about a 30 PE in 2027. I think people will finally wake up and realize how sticky of a business model PayPal really has here. And so I believe the market cap is going to be $200 billion plus in 2027. Today, the market cap on PayPal is like 60-something billion dollars, which shows you kind of the risk-reward profile in regards to PayPal. Now, I've been buying a lot of PayPal shares here recently, right? So the question might be, am I going to continue to buy PayPal shares? And the answer to that is absolutely. Through the remainder of this year, potentially into next year, I will be buying PayPal stock, but certainly for the remainder of this year, I will be a buyer of PayPal stock. I mean, honestly, pretty much like week in and week out in regards to the stock. It's one of those that, yeah, we're down on it, but I think it's going to come back very nicely over time. All right. Number 4 best stock I own is Palantir, PLTR Technologies. We're up 64% on this one in the public count. All these are as far as a percentage basis, up a little less than $32,000 on Palantir right now. Palantir's market cap's about $31 billion on this company right now. And in terms of my base case for Palantir, so here's where things get interesting, right? For Palantir, based upon the net income growth, they should be able to pound out over the coming years, which I think 75% a year is pretty realistic. Remember, this company's at infant stage profitability. Like if you're a company that's been profitable for 5, 10, 15 years, 75% average for the next 5 years is ridiculous. For Palantir, it's not ridiculous at all. So basically, I have them doing just under $5 billion of revenue in 2027. I'm doing about 1.1, maybe 1.2 as far as net income goes. And with the company with the gross margins Palantir has, I think they can definitely hit that number. I think it's very realistic. Now, this is where things get interesting, right? At a 50 PE, they'd be a $58 billion market cap, right? Well, the market cap right now is 31, so even at a 50 PE, it's not even a double up, right? But what do you throw for a PE on a company that's growing 20% plus a year top line and growing 70% plus a year bottom line, right? I think a 50 is pretty fair. I think you could actually command probably a lot higher than a 50, probably a 60, 70, or 80, right? I only run my projections up to 50 because I never want to price in like a 60, 70, 80 PE scenario, 90, 100. But I can tell you, it doesn't really make sense to price a stock at a 30 PE or a 40 PE when you're growing your net income 70% plus a year over the last many years, right? So that's where things get really interesting with Palantir. I really like Palantir a lot as a business model. I feel like it's a very attractive risk reward. I think it's a very misunderstood stock in terms of their business model and in terms of valuation. Because some people would say it's ridiculous to have a 60, 70, 80 PE on it. Well, you just don't understand growth investing. That's, if you are a great growth company, you can command those valuations all day. And great growth companies, guess what? They always trade rich. Amazon's always traded rich. Since the first time I looked into Amazon, like 2010, 11, Amazon traded rich. Tesla's always traded rich. Palantir's always traded rich. These stocks always will trade rich. Great growth companies that have great 5, 10, 15, 20-year growth, exciting opportunities they're going after. These companies are always going to trade rich. And it's just up to you if you want to pay up for it or not, right? Some people are willing and other people are not. And if you're not, you'll just be left on the side of the road. That's just the way it works in regards to stocks, okay? Number 4, worst stock I own here as a percentage basis is CMG, Chipotle options. I have one Chipotle option. It's a put option. This is a hedge position for me. So whenever I do hedge positions, my plan is to lose money. If I make money, then it usually means the market went really bad. As far as Chipotle as a hedge, it's a burrito chain, obviously. We all know it, right? They've obviously gone up a lot on price over the last couple of years on their customers. I mean, it's hard to get out Chipotle under $10. You used to be, you could get a burrito there $5, $6, maybe $7. You can't get out of there under $10 now for just a basic burrito from Chipotle, right? Never mind, you add a few fixins, this and that, and some guac and whatever. Next thing you know, you're $15, $20 deep for Chipotle burrito, right? And so the interesting dynamic is if we have any sort of recession, unemployment goes up, I think Chipotle numbers are going to get hit pretty hard. And when it comes to, because people will trade down, instead of spending $10, $12, $14 on a burrito, they'll go to Taco Bell where they can spend $5, right? $4, something like that. And so that's a dynamic that if the economy got worse, like Chipotle's benefited from super low unemployment for a long time. And the problem with Chipotle really is valuation. They trade like they're a tech company. like you look at the valuation of Chipotle, they trade like they're a tech company. And so if that growth rate gets hit at all, they're going to get crushed like a souffle, as Elon Musk would put it, okay? And so that's where things get really interesting with Chipotle. And so it's just a hedge opportunity for me, but it's, as far as so far, it's not going well, which is fine with me. Meta stock is my number 3 best stock overall here. We're up 135%, up over $300,000 on this one. By the way, Chipotle down about $1,100. Meta up $300,000 in regards to Meta. Now, in regards to Meta, $734 billion market cap, but actually there's so much upside here that's going to happen over the next several years, in my opinion. Look at my base case for Meta. This is shocking, okay? This is my base case. This is my bullish case. This is not my ultra bullish case. I have them doing about $55 billion of net income in 2027 and about $224 billion of revenue in 2027, which would represent 14 and 14% top line, bottom line growth rates, okay? Now, in regards to this, that puts Meta in, by the way, they should easily command a 30 PE, kind of like Apple, Microsoft, companies like that traded at a 30 PE nowadays. Meta will eventually get there, where they'll just be able to consistently trade at a 30 PE, forward PE, like year in and year out, because people will respect Meta like that. It just takes a while to kind of get there, right? Their market cap should be around $1.7 billion in 2027, which means even after this, all the money I've made in Meta, this is small potatoes from what it will be long term. I believe we'll be sitting on a $700,000 plus gain in the year 2027, if not $800,000 plus gain on Meta stock overall. So nonetheless, folks, yeah, Meta's got a long runway of growth and a long runway of kind of the stock price going up. This is going to be a $600-700 stock in future years, in my personal opinion. And it's going to be a whole lot of a fun ride, okay? My number 3 worst stock out there is Avant brand. So Avant, man, the stock price has got hammered. This one I don't feel like it deserves it, okay? My second worst stock, it deserves the hit it's gotten. This stock does not deserve what it's gotten, just to be quite frank. The problem with Avant, it's a super, super small market cap. It's the smallest market cap company I own. No one wants a piece of any of these super small market caps. Even if their balance sheet's in a good place and even if their numbers are good and their business opportunity, no one wants a piece of these sorts of companies right now. It's just the way it's been, but this company doesn't deserve what they've gotten. Last quarterly results they just posted, revenue was up 100+% year over year, positive adjusted EBITDA, positive cash flow, 4th consecutive quarter of positive adjusted EBITDA and cash flow from operations. They're flirting with going full scale over to net income positive. If they can get there, that's another game changer for the company. So, man, down 42K in it, but this one just doesn't deserve it. Sometimes that happens in the stock market. And that's the risk with these super small cap stocks is, if you're in a risk off market where no one wants to own anything smaller cap, like these stocks just flounder. And if you have 100% revenue growth and still no one cares. So it is what it is. I think eventually people will care about Avant, but it's not today. It's not today, right? And so I'm holding through. I've actually been buying some shares recently, and we'll see where it goes from here, okay? Tesla is my number 2 best stock overall. We're up $355,000 on this one, up 904%. And do keep in mind, I've taken most of the profits over time in good old Tesla mass, so this is what I got left. 1,665 shares of Tesla. Now, in regards to Tesla, right? Let's call it what it is. They're in a real tough spot right now. Not because of anything they've done. Their products are phenomenal. Demand for days for the 3, the Y, Cybertruck. But interest rates have gone to the moon. Just to be quite frank, over the last 18 months. We haven't had a deal with interest rates like we're dealing with right now in decades, right? It's been a long time. And so naturally, it hurts substantially home sales. It hurts substantially car sales. Anything expensive, furniture sales, all that stuff gets hit hard, right? And so Tesla's in a bit of a price war right now. They're eating their competition's lunch, to put it quite frankly. They're eating their competition's lunch right now, and they're doing phenomenal. But with that being said, they're basically got one hand tied behind their back, which is interest rates. And so they're fighting with one hand, and they're destroying their competition still. But it would be a lot better if they had this other hand untied. And it's not the way it is right now. And it might not be like that for a while. And you can say, well, even if the Fed switches, interest rates start to come down, maybe that's because the economy got hit. Well, if the economy got hit and we had a recession, that would also be bad for Tesla as well. So that's where Tesla's just in a pickle in the short term, man. And when I say pickle in the short term, I'm talking really over the next 1 to 2 years, continues to be in a pickle. We know Cybertruck's coming. It's going to be very exciting for demand. But at the end of the day, man, the company's just in a tough spot here in the short term. Now, in regards to gold Tesla, we're looking at about a $750 billion market cap on this stock as of right now, right? This is my base case for Tesla. I have them knocking out about 32% revenue growth on average over the next several years, and I have them doing about that growth on the bottom line as well over the next several years. Obviously, years like this will not be as exciting. Some years, they'll be posting a lot better numbers, right? But this is I do it over an average over the years. So if I think a 30 PE on this stock is pretty dang fair for 2027, because obviously Tesla will still have growth in 2027 and beyond, but it's not going to be the sort of growth you're going to see over the next, let's call it 2024, 2025, 2026. So I think a $1.5 billion market cap is pretty realistic for Tesla in 2027. And that's a double up from here, folks. That's a double up from here. So Tesla actually still is a buy, believe it or not, even after its massive move over the years. So that's good old Tesla for you. But once again, they're in a tough place in the very short term here. So you gotta take this baby apart from the what's going on short term versus what's going on long term for the good old Tesla. Okay, my number 2 worst stock in the public count as a percentage basis is Honest, down 71% in this one. We're down $127,000 in regards to Honest, and honestly, it deserves it. It deserves it. Unlike an Avant that I feel like it's been unjustly destroyed, Honest deserves to be destroyed. I mean, they missed so many numbers. The losses got worse. Nick Vlahos just, I don't know, man. He just couldn't run the company. I don't know what the other way to put it. It's just a bad job, right? Now, recently Carla Vernon's come in, and I will say she's given at least some hope to the company, and especially after kind of seeing this last quarterly earnings. I was like, okay, maybe. But the thing with Honest is you can't get too excited. It's like, okay, might have something here. Carla might have the company going on the right track, and that's good. But we got a long road ahead on Honest, okay? Long road ahead. So I'm a huge believer in their products and what they should be able to do and build a brand here. But it's just, they've got a very successful brand in so many different areas, but it's just they've had misexecution. So the latest quarter was the first quarter where it was like there might be some glimmer of hope. But with that being said, I deserve to be down 70+% on that stock. It's just bottom line with that. And it's a tough one, man. It's a tough one, but it is what it is. Now, my number 1 worst stock of all the stocks, I won't get into my number 1 best stock, is the Planet. Down 76 whopping percent on the Planet. 54K down on this one, right? And this is what you got to go through as an individual stock picker. Sometimes things are going to work really freaking well for you. And sometimes it's going to be like, geez, can we get a break? No, in regards to Planet, I do believe this one will come back. I believe it's going to actually start coming back in the second half of this year. I believe they're going to start reporting much more impressive numbers over the next several quarters. And I believe things will get better for the company in 2024 and beyond. I believe the market in regards to this industry is in a bottoming out phase right now, and I believe it will gradually get just a little better. I don't believe we're going to have a V-shaped recovery in this industry. I believe things will just kind of gradually get a little better over the next several years. I believe that will be a boom for Planet. If there could ever be any sort of realistic possibility of federal legalization, it's a game changer. That's the V-shaped recovery, if we could ever get that. I don't know if that's going to happen. Great balance sheet in regards to Planet. They got the Illinois location opening soon. It looks like the Vegas location has been ramping back up business, and at least from what I've seen at that location. So we'll see what numbers they post over the next few quarters. Obviously, Vegas is going to continue to just have a lot of big events. We got the Super Bowl coming up. We got the F1 race coming up. That's massive. And obviously, Vegas is always just a huge tourist attraction in general. So I believe I believe Planet will come back, and I believe it will actually start to come back the back half of this year. It'll go into many years to go in the future. So I have full faith in that one. And the management team there has always been, the management team there has always been one of those that they figure it out, man. This is a company that, remember, during Rona, they should have went bankrupt. But the management team pivoted toward curbside pickup. They pivoted toward delivery. They didn't even do stuff like that. There was like no, like it was only a store business at that time. They pivoted. They figured out even in the worst situations, and they made it through Rona. Like this management team there, for a small cap company, they're one of the very few that got their heads on straight. And so I have full faith that they'll bring this baby back, and we will go green on this stock, and then we'll go very nicely green. I have a lot of belief in what they will pull off there in the business model. Okay. Now, my number one best stock overall, this is a very confusing one, is Elf on a Shelf. We're up nearly 1,300%, and unfortunately, I used to hold almost 10,000 shares of Elf between all my different accounts. Now I only hold 1,000 shares. I wish I held every share of Elf. Okay. Stock's done tremendous. A lot of people are like, is this an overvalued stock? Well, I don't know about that, to be quite frank. It actually might still be a good value. Check this out. So, company trades in terms of, this year's numbers at a PE of about 50. Now, you might say, gosh, that looks so high. Market trades at 20, something around there, right? Well, what if I told you this is a company that quarter in and quarter out kills numbers? Look at this. This is over the last several years of Elf on a Shelf. They beat. They surprise the upside quarter in and quarter out. So whatever you think you're paying for the stock is actually much likely a much lower number, as been consistent for years with this company. They never freaking miss on revenue. Like, it's ridiculous. For years, they just beat and beat and beat. Like, someday I'm sure they're going to miss, but I don't know when it's going to be. Like, it's insanity, right? Check this out. EPS, over the last several years, they missed one time. That was in December 2021 quarter. That's crazy. Like what are we talking about here? One miss in all these massive beats. And look at, it's not just like they're beating numbers. Look at the EPS beats. 92% upside surprise, a 113% upside surprise, a 105% upside surprise, a 126% upside surprise. So Elf on a Shelf is just arguably one of the best, most well-run companies in all of the world. And it's like, what are you willing to pay for a premium valuation for one of the fastest growth companies you'll find certainly in their industry, and one of the most well-run companies, period, in the entire world? I don't know a company that's more well-run than Elf. I don't. And that includes Tesla. That includes Meta. That includes Apple, Microsoft. There's no one in the world more well-run than Elf on a Shelf. That's a special stock. Not even NVIDIA is as well-run as Elf. Crazy, man. And so at the end of the day, I continue to hold those Elf shares, and I'll continue to hold those because I love that baby. So appreciate y'all joining me. Top 5 best and worst stocks in the public account. Some painful ones and some very, very happy ones. Let's just put it that way. I appreciate y'all joining me. Thanks so much for being subscribed. Hope you got some good value out of today's video. Let me know if you enjoyed the video in the comment section. And also, if you're looking to join my private group, then check out the pinned comment down there. I've actually put together a nice little 9-10 minute video for you guys, kind of explaining the value you get in the private group, because I always get questions about, what is it and those sorts of things. So that's the pinned comment down there. Much love and have a great day.